4 or 5 years ago, you had to cut a pipe, put in a piece of device.
Right.
You're not going to get anybody to do that.
Right.
But now you've got sensors that cost $1 that can sense the pH levels of a pool or detect humidity or temperature changes, which may create a freezing.
Welcome to the Elevating Leaders series, where we go beyond the headlines and straight to the people who are redefining insurtech and business transformation. We've caught up with the visionaries and the pioneers that are currently driving the industry forward, bringing you exclusive insights, strategies, and stories you won't hear anywhere else. If you're ready to go deeper, this is your front row seat to the future of insurance. I'm Miguel Edwards, and this is 5 Minutes.
Mark Gardella, thank you so much for joining us here on another episode of 5 Minutes. I really appreciate you taking some time out of ITC to join us.
Absolutely pleasure. I'm excited to be here.
So I got a question I lead off on all the time because it's always a fascinating story. I met yesterday, actually, the first person I've ever interviewed that planned a career in insurance. And from the beginning. So I've got to ask you, how the heck did you end up here?
Like everybody else. My dad.
Okay.
57 years as an Allstate agent.
Yep.
In fact, in my undergrad, I went and pitched, got licensed, pitched, realized I want to go do big things with my, big business things, and went to grad school, and then I immediately went into insurance. So
my number two.
Yeah. And you know what? To be honest, wouldn't change it one bit. It's an absolutely fascinating industry and just absolutely wonderful.
Awesome. So talk to me a little bit about what you're doing now, what's going on in your career.
Yeah, so first-time founder, CEO of Surtis.
Okay.
We are an MGA that's focused specifically on professionally managed multifamily portfolios, apartments, garden-style apartments. But really, we differentiate ourselves by the use of data, operational data. Basically what happens on the ground, maintenance people taking care of properties. And we literally put in sort of the best practices on how you maintain a safe and resilient property. And every data point that's in every one of the forms, like the things that they do walking around the property and making sure that the gate to the pool closes and if there are any tripping hazards, all those questions go through, and we pull that through into our proprietary score called the Surtis Risk Indicator.
Okay.
Think of it as like a FICO score.
Okay.
And we use that directly in how we think about pricing the insured. We also share that with our broker and our insureds, so that they actually have visibility into how that asset is being managed, so they can run their business better.
That is fascinating. So now, and if this is proprietary and you can't share it, but I'm curious, how do you aggregate those data points? Are those on-site visual inspections, or?
So great question. Actually, we have a strategic partner called Leonardo 24/7. We leverage in multifamily. We leverage their application. They've been in the business for 10 years, specifically around helping apartment managers or property management companies or owners actually maintain their assets. So we're leveraging that technology, but we've customized specific things that are done on the ground, and we use the data points that come through the application to drive that score for us.
Got it. So if you encounter a property manager that's not using that type of facility, you'll encourage them to use that facility so that you can get the data?
To be able to get into the program, you actually have to commit to deploying and continuously using.
Makes sense.
Because multifamily, in my close to 30-year career, short of Florida property, I don't know that I've ever seen a market that's this hard, multifamily. So the need is there. Everybody's running from this. The only way that we have strong conviction, the only way you're going to be able to fix this and bring stability into the pricing and lower the overall cost of risk is actually to invest in owners who want to control that risk and bring that cost down and make investments in their properties to make sure that it's being handled. Got it. So we know what the answer is for Florida, but outside of Florida, you describe still a hard market in multifamily risk. What are the risk factors driving that? What is the answer for Florida? I'll just sort of, I don't know that anybody's landed on that one. To be honest, what I'm focused on is investing in owners who say, hey, I need to control this aspect of my cost structure. Yeah. Because that is the insured who is going to commit to really improving their business in a way that's going to drive down claims, which
Okay.
is good for the residents. It's good for their bottom line. And really, there's, at this point, it's a material impact. The cost of insurance is a material impact on their investment decisions. Every investor, if you talk to any investor that's in multifamily, they're saying, can I afford to buy this property because of the cost of insurance? Can I get insurance? Do I have to get rid of this property because the cost of insurance has just gone up so high that I'm not making it? Do I build this project? So if you think about the housing shortage that we have in the nation, this is a heavy impact on it. And insurance is actually a negative impact. We think that we're bringing a solution, a pathway to being able to bring those costs under control so investors do what they do, continue to build.
I'm geeking out here, Mark. I'm sorry, and forgive me if this is too deep. Would you say that those risk dynamics are really looking at more of the liability side of things versus the property side, or it's both?
It goes both. In fact, it goes equally across. So I talked about walking the grounds and looking for tripping hazards at the gate to the thing, but I also take a look at, once a year, let's take a look at the roof. Let's make sure that we're doing inspections on boilers. Taking and understanding the controls that come in on around smoking, around barbecues and things like that. The things that start fire. So it equally hits both the property and the GL.
Got it. I'm guessing that the first off, the kind of the risk assessment and the underwriting quality really kind of is the selling point and gets you access to capacity, or are you still facing capacity challenges like a lot of other MGAs are facing?
We have a wonderful capacity partner in Accelerant.
Okay.
I've known most of the U.S. leadership team for over 20 years. So we are fortunate that we have such a great partner. Because it's tough. I literally can tell you friends of mine that I've worked with for years, when I said, I'm starting this multifamily, and they started laughing.
Good luck.
Yeah, they started laughing at me. So we feel fortunate that we have a great partner, and Accelerant has been fantastic to work with, giving us the latitude to be able to scale, but in concert with being disciplined, because if you're thinking about the ingredients of a good MGA or program administrator, it's really thoughtful distribution, disciplined underwriting, and stable capacity.
Right.
The fourth element that we think we're bringing in is leveraging data in a unique way to be able to manage and think about how do you select price, risk, and how do you deliver value back to your broker partners, and also your customers.
Got it. I want to talk more about that data piece, but you mentioned that stable capacity, and just forgive me for pressing on this. I was in a session yesterday. Nate Galea from Celent was leading a panel around insurtech investments, particularly in the MGA space. And one of the panelists said, if you've only got one capacity partner, you're in trouble.
That's a fair assessment. What I would tell you is it is quality of partner. That's where Accelerant comes in. They understand the business. They also have a five-year commitment of capacity, which is a rare thing, a very rare thing. That all being said, there are opportunities to partner, and our model, we have strong conviction that our model that we're using from a risk management standpoint for multifamily will transport into other asset classes.
Nice.
If you're doing the right thing on the ground, depending upon whatever asset class is, then it's going to be a better risk. And if you're partnering with that owner or that property manager, then it's going to be a better risk. So we have strong convictions that's going to give us opportunities to be able to expand additional capacity in a lot of different ways. But always we work really closely with Accelerant.
Yeah, no, I love that. And that's actually, you actually went right into a space where I was thinking about, which is what is the logical extension of what it is that you're doing going from multifamily, because you obviously have a model that can scale. It's a thought process. So what are you seeing as some of the logical extensions from here?
So they're really, the way I think about building from a ground up startup MGA is how are you durable over time? And that's delivering the value back to your stakeholders. So for my carrier partners, it's delivering underwriting profit. For my brokers, delivering differentiated products that they can go out and sell and win business. And then for our investors, obviously, being able to scale a really profitable business, all of which MGAs are fantastic capital efficient business. So from that standpoint, what we spent a lot of time this year is thinking about how do we scale this business. And first step was thinking about how do we build an operational platform that it brings efficiencies, leverages different technologies at each touch point. How can we bring additional efficiencies to it? I'll give you a couple of examples. So we leverage geospatial data. We leverage a unique credit, community credit score. We pull property data. We're looking at all those and getting the decision points right in front of our underwriters, so they have the decision points that are right in front of them. So bringing efficiencies. RevUp, who's our strategic partner, both on marketing and also on a strategy standpoint, has been instrumental in helping us think about that.
Right.
But then you talk about how do you diversify in terms of additional programs. And if you look at all the most successful MGAs and program administrators that are out there, they have multiple programs that are across different verticals. It could be different lines of business, could be different classes of business. Our model is operational platform.
Right.
Excellence and differentiated from leveraging data so that we can also bring additional value. That's why we have strong conviction that really helping to shape operational behavior on the ground in a way that's going to mitigate both severity and frequency of claims. That's a recipe that you can drop into any program.
I love that. You know, I'm a technologist, and one of the things that just occurred to me is what you explain is the foundation of application development. When you think about the componentization and the scalability and how do you start with a particular use case, but you don't paint yourself into a box where that's the only thing that application can do. And then obviously to the extent that you've got data platforms. So I think you've just laid out a really amazing formula for for how MGAs need to be thinking about it.
I appreciate that. I would suggest that as an industry, as one of the original data-driven industries, we haven't done enough to be able to leverage that in a way that delivers more value back to our customers. I have a strong conviction, again, going back to operational behavior, that if we're investing in the right owners and they're committed to really creating a safe and resilient property, they can charge more rent.
Right.
They can go back when they do decide to sell. They can go back and this is how my asset has been managed.
Right.
Think of the analogy of a pre-certified owned BMW and one off the lot, one that's pre-certified owned.
Right.
Which one's going to get a higher price?
Yep.
We think that building from the ground up, data-driven analytics will deliver more value, and ultimately that's how we're going to differentiate ourselves and make us durable across as we scale.
Makes a lot of sense. Let me shift gears, Mark, and talk a little bit about distribution. So, you and I have kind of shared a little bit of some career in distribution.
Yeah.
And one of the things that I've been tracking is, there's a confluence of issues. We've got this kind of consolidation of distribution. The aggregators are coming and scooping up all the independents, and then we've got a talent crisis kind of writ large in the industry. What kind of challenges are you seeing from your perspective on distribution, and what are you doing about it if you're seeing them?
So, my history, and it's coming up on 30 years within insurance, but most of that has been within the program space. My observations have always been that the best programs, or MGAs, are ones that identify underserved or misunderstood classes of business. And that sort of drives, in a lot of cases, the distribution. In our case, we're very focused on identifying producers who understand this class of business, understand their clients, and have that business and control that in a way that is going to support us. So we're not shotgunning. We're being very deliberative about who we work with, and we're looking to build deep relationships with us. For us, that's a recipe for success. But for other product lines, other MGAs, it may be straight. If it's straight through process, then go out and open it up as wide as you can.
Right.
But for us, we're heavily. It's a very much a product and a class of business that needs to be underwritten. So we need to be able to bring efficiencies to the underwriter, but also work with producers who know this business.
Yeah. That's got to be a pretty laser niche market, though, I'm assuming, in terms of the producers that work in that space.
Well, there's virtually every agency or brokerage has
Some of that.
multifamily in it.
Okay.
What we're looking for is aggregation.
Okay.
And we've identified already, producers that you wouldn't necessarily even know, but this is what they've specialized. There's also an opportunity within the nationals and the super regionals who control a ton of this business. But what we know is it's not every office.
Right.
It's those particular producers, those particular offices. That's why having a really experienced sales and distribution team
Right.
in there who already have relationships, understand who
Right.
they should be working with, who we should be working with, who we shouldn't be working with.
Right.
Clearly, that for us is the recipe for success.
So you can go have a conversation at the SIA level and then find out where to go from there.
Yeah.
That makes a lot of sense.
Yeah.
More efficient for you as well.
Yeah, and it's in those cases in large organizations, it may be if the submissions are going to come in, they need to go through a particular group
Right.
that understands this business because
Right.
our underwriters need to be able to have that conversation and get the right answer first time.
Got it. Makes good sense. So I want to go back now to data. I put a pin in that one, and I was trying to remember to make sure I didn't forget it. So data, and we can't talk about data, and we can't be at ITC without talking about AI.
Yeah.
So where does AI plug into your thought process and your innovation model as you think about going forward?
So going back to really what I've been focused on investing this year and going forward is the operational platform, bringing efficiencies across the entire operational platform so that we're delivering better margins back to our investors, but also to how do we assess risk coming in. So I'll give you a couple of different examples especially around the RevOp project that we've been working with RevUp, is identifying those areas where it's processes or activities that just have to be done. Submission intake, being able to assess, elements out of an SOV, a statement of values, being able to apply AI, and those technologies have been developed for a while.
Sure.
Our senior tech advisor, Ron Glassman, had a startup that literally was looking at that, had a successful exit, but that's work that he did. We're leveraging his knowledge to be able to bring in those efficiencies. Now, on the backside, in terms of leveraging for assessment and being able to continue to develop models, we're going to look to leverage AI to be able to deliver different models that'll assess different risk aspects of the exposures that we're looking at. So maybe it's equipment breakdown. Maybe it's what is the relationship between this unique data set that we have or that we found, and does that correlate back to the actual loss ratio that we're going to impact? And those are the relationships that AI is only going to be able to drive.
Sure.
We're not going to be able to make those connections.
Right.
So
not at speed or scale.
Yeah.
Right.
So we're actively looking at developing new models that are leveraging both existing and future AI models that are out there. I'd also say that there's an opportunity to be able to leverage AI to be able to create a better customer experience. And I talk about, most people, these are my insureds or whatnot. They're our customers.
Sure.
How do we deliver value back to them? Giving them insights, being able to ask them. You look at large language models and the ability to go in off of our own data, be able to go in and have them query and ask natural language questions. Hey, what's going on over here? What's going on this particular property? And being able to return a response.
Sure.
That's delivering value back to our customers.
Yeah. Have you introduced IoT at all into the construct?
So, I've looked at and worked with IoT for a long time, dating back to Zurich days, the first emergence of telematics, which is the proving ground.
Sure.
The use case that is pervasive in the industry, but there's a ton more of opportunities as the cost of the sensors go down.
Yes.
Which has always been the challenge. It's also the challenge of what does it take to actually put and install that.
Right.
Water leak detection, water shutoff.
Right.
4 or 5 years ago, you had to cut a pipe, put in a piece of device.
Right.
You're not going to get anybody to do that.
Right.
But now you've got sensors that cost $1 that can sense the pH value levels of a pool, or detect humidity or temperature changes, which may create a freezing. Deploying those, we're actively looking at how do we bring those technologies and blend them into the operational data that we're using for our SRI to drive additional insights that we can leverage for better risk selection and pricing.
Yep, makes a ton of sense. Great. So, Mark, I'll close on this one. We are here in a conference at 9,000 plus people, lots of innovation, lots of sessions. What are you hoping to get out of this? What are you hoping to go home with?
So, for us, for Surtis, this is an opportunity to continue the conversations with investors.
Okay.
Both investors that are on our cap table, but also potential. But it's also an opportunity to gauge the technology partners, potential partners that we're looking at. So looking at, we know where there are pinch points within our efficiency. We know what kind of data sets we're looking for. And this is an aggregation of all of the best players.
Yeah.
And an opportunity to have those conversations and then assess and take those conversations going forward.
Love that. So ITC just brings all that together.
Brings it all together.
One opportunity set for you. That's awesome.
An hour flight for me.
That's awesome.
That's all it is.
That's great. That's awesome. Mark, this has been so much fun for me. Very enlightening. I've got so many more questions that I hope I can call you up and bother you for a part two, because this is a really fascinating part of the industry you're in.
Yeah, I appreciate this.
Awesome.
This is wonderful. Thank you
so much, Mark.
Thank you for joining this episode of 5 Minutes. If you've enjoyed our discussion, we'd love for you to share it with anyone else you think might find it interesting. Also, please subscribe on whatever podcast platform you're listening on and hit that bell to stay on top of the game with our practical 5-minute episodes. We look forward to seeing you again next week.